Hi, everyone. Welcome to another edition of Bitcoin Law Review with your host, Tone Vase. Really wish we were able to get the show going every week, but every month is better than 0 times a month. And what better way to kick it off today with our panel of 3 lawyers, one joining us for the first time. So let's welcome Preston. Preston Byrne to the show. Hey, Preston.
Hey, Tone, how you doing?
Awesome. Oh no, you guys can stay unmuted. You don't have to mute yourselves at this point. Preston, tell us a little bit about yourself. Your first time on my show, man, but we've known each other for a while.
Yeah, so it's good to finally do this. We were talking about it at PorcFest, and finally this has happened. So a little bit about me. I'm a lawyer in 2 countries, England and the States. Back when I was working at a big, evil corporate law firm, I decided I was going to do a blockchain startup, and it did this permission blockchain thing, which was the first of its kind at the time, and got a lot of stick for it from the Bitcoin community for trying to take blockchain and make it corporate. I did that for a few years. Then afterwards decided I wasn't so good at selling software, so I went back into the practice of law. And now I have my own little law firm. So I represent cryptocurrency companies, social media companies, and telecommunications companies that tend to all be quite crypto or Bitcoin forward.
Awesome. Thanks a lot. And we also have Drew. Welcome back to the show, man. How you been?
Hey, Tone. Good to be here. Thanks for having me.
Excellent. And of course, the lovely Sasha.
Thanks, Tone. Glad to be here. Excited for the show.
We're going to get your comments on DC. You were trying to make it to those Libra hearings, but you didn't make it, right?
Right. Yeah, I ended up getting busy that day.
Yeah, don't you hate it when work gets in the way? All right. Bill Rustus may be joining us a little bit later. Just saw a message from him, so we're gonna go ahead and I'll try to keep an eye on that. All right, let's jump right into our topics. A lot has happened since our last show. Now, this has been brought up as a topic earlier. I honestly did not expect Blockstack to get their Reg A status for their security token sale, but they did. And lots of great coverage on this from the block. So I'm just gonna cover a few highlights, and then we'll get our lawyer's take on this. So the block wrote a couple of articles on this. I'm just gonna read the quick takes. Blockstack is raising more money to build out its blockchain, registering its token under Reg A+, a first for a crypto project. Despite the qualification allowing it to conduct a security sale, the company doesn't view stacks as a security token. This seems rather odd. That's my comment. Let me get back to the article. Some industry members are doubtful that the Reg A+ model will benefit crypto companies. I personally disagree with this. I'm gonna throw my little take on this. Since Reg A+ generates more success for companies with an easily understood product. So this entire article is actually, most of it is based on commentary from a Reg A+ expert. And if I take some quotes from the Reg A+ expert, right here it says, I think Reg A+ is a great fit for established businesses, but not a great choice for startups, he said. But by and large, most blockchains or crypto are pre-product or pre-revenue. That is absolutely correct. This is probably the absolute worst type of company to raise money from retail investors in a Reg A+. Now, I don't think this person clearly understands the point of an ICO. Oh, my mic's off? Hold on, mic. Sorry, guys. Oh, my bad.
But it sounds better the last minute or so.
No. Thank you for the reminder, because I had the wrong mic set. This should be much better now, right?
Yeah.
We'll check the live chat. Yeah. It should be much better now. Okay. Thank you guys for that. Now, I don't think this person clearly understands Reg A+, but he clearly doesn't understand how blockchains work. The way blockchains work is you raise hundreds of millions of dollars to pay yourself to do vaporware on companies that don't actually exist. So the Reg A Plus is the absolute godsend for ICOs, including Blockstack, because now they can sell their illegal securities legally. And even they don't even think it's a security because it's a utility token, which raises all kinds of other hell. Anyway, I can talk about this all day. I want to mention a couple of other things. So the Block did another good investigation on the actual company where they looked at the company's finances, and they are completely abysmal. No one is using this thing. It's completely useless. They're trying to build this out. They're basically trying to get paid to build vaporware. That's how I see this company. Matt did an amazing job summarizing it. I don't know if you guys saw all this. I'll read a couple of more highlights. Blockstack hopes to raise 28 million through its ongoing Reg A Plus token offering, selling its stack tokens at 30 cents each to the general public, implying a market cap of 260 million, and so on. These tokens will be used as a medium of exchange for apps, services, and name registrations on the Blockstack network. Remember, guys, these guys did name something, Namecoin, or I mean, they tried to do identity on the block on Ethereum before they did Blockstack. It's the same company, pretty much. Since its inception in 2015, the Blockstack network has generated 9,500 verified users, an increase approximately 55 users within the last 2 months. That is actually nothing. The network is heavily reliant on upkeep provided by Blockstack, a company which has faced serious financial trouble, yada, yada, yada. Okay, here's a really interesting part. Here's a graphic. So basically, now that they're allowed to do their Reg A, you guys, I'm going to let you guys explain Reg A Plus. I actually understand it. I did my reading, but I'll let you guys do it as the experts. Okay, so 215 million tokens are going to go up for sale for 12 cents to insiders that are already holding equity of Blockstack. Now, right here, it says that, just look at the numbers. 323 million stack tokens already exist, and they were sold to 24 accredited investors at 0.00012 cents. So these are the same people that will now have a chance to buy another 215 tokens at 12 cents. I'm not sure why they would necessarily do it. These guys will probably be selling it to some of the new people that are going to be considered insiders, and they're going to make, what, 1,000x on this. Then only 40 million tokens will get sold for 30 cents. Probably they're going to create new ones. So basically, and then another 40 million tokens might get sold. But the majority of the tokens are already there. Like, the insiders already have all of them. And this thing was evaluated twice at basically the company is not making any money, and it's not going to make any money. The whole point of this is to raise money. And now, I really hate this. I think the SEC screwed up royally here. But before we get to that, who wants to take the lead and explain Reg A Plus?
I can do it.
Go for it.
Okay, so generally speaking, in the US, if you offer a security, you have to comply with certain laws that require registration of the security. That has the effect of making the security a public security. If you want to offer security privately, you can do certain things based on exemptions from the registration requirement to offer them privately. You hear those called private placements. Private placements typically are a sale of equity or a sale of debt in a company. Equity means you own a piece of the company, you have certain voting rights sometimes, and sometimes you have the right to enjoy the profits of the company. Debt is generally characterized by a binding promise to repay, typically with interest. The Reg A Plus is a specific kind of exemption from registration that allows an issuer, depending on which flavor of Reg A Plus they use, to sell private placements of securities. There are a bunch of different exceptions that are referred to by Reg something. Reg D allows, of which there are a couple different flavors, allows you to sell to US persons. Generally, they have to be what are called accredited investors, meaning they have a certain financial status, meaning they have a certain net worth, or they've made a certain amount of income over a period of years. There's another one called Regulation S, or Reg S, which allows a US entity to sell to non-US persons. And then there are a bunch of others. Reg CF, you might be familiar with, allows a company to raise up to $1.07 million without doing a lot of the compliance that's necessary for a publicly registered raise or for Reg D and Reg S. Reg A Plus has been on kind of in the crosshairs of the crypto world for a while, because Reg A Plus allows an issuer to sell to both accredited and non-accredited investors. Tone's got definitely his own opinion and thoughts about ICOs. ICOs to me were an effort to raise money by avoiding securities regulatory compliance. So for folks that want to be able to just, right. So for folks that want to sell tokens to retail investors and accredited investors, they've been waiting for the SEC to qualify these Reg A Plus offerings so that they could offer their tokens or their whatever business interests they're selling in the form of tokens to retail consumers. The green lighting of this A Plus, as the screen shows, allows Blockstack to sell these stack tokens to a group of different folks. Yeah, there's Munib. So really what you see here is Blockstack has been allowed to sell tokens that are securities under US law. They have made express in their paperwork that they are not selling equity or debt. They're selling a investment contract. And what's interesting about that is investment contracts are definitely are typically something that you back into. You meant to do something that wasn't a security, and somebody alleges that you in fact issued a security because what you were selling was actually an investment contract. But in this case, Blockstack was intentionally offering an investment contract, and they have very clear disclosures and disclaimers in their offering memorandum that goes into, or offering circular, excuse me, that goes into what rights you do and you don't have with the token. The token is to be used as a payment instrument within the network being created by Blockstack. So you can think about it as though Blockstack announced its existence, started building stuff, raised money privately, as far as I'm aware, in compliance with the law, and then waited out a whole bunch of regulatory back and forth by their lawyers with the SEC to be able to raise the token that's going to be used for friction on the network in a legal way. Now, compare that to Ethereum, which arguably did an unregistered securities raise without compliance with law. And the thing that they sold was not equity or debt, but an instrument that was to be used to pay for friction on the network. That is, to send messages back and forth, run smart contracts, and send Ether back and forth to people to buy assets like ERC20 and ERC721. If you compare what Blockstack is doing, which is doing the yeoman's work of negotiating with the regulators and waiting, I think, years to get their A plus pushed through, it seems to be a little bit more of a regulatory clean path than that was taken by Ethereum. I don't want to say too much because I know Ethereum has a lot of fans and there's a lot of ambiguity as to what they did or didn't do and what the Ether asset is or isn't. The SEC appears to be taking a line that says pre the DAO Rule 21 report, they're not super concerned, or at least they aren't devoting enforcement energies at the moment that we're aware of. But that's sort of how I view the Blockstack offer.
Yeah, so basically, I don't see Blockstack as any different than Ethereum. They're basically trying to rebuild Ethereum, only they went about it to try to get a legal framework to sell their, useless, terrible token when Ethereum did not. That's like the only difference to me, which you seem to not. You don't have to agree to that, but that's what it sounds like.
Blockstack, I think, had more tech than Ethereum did when they started. I think that's one thing to point out. The other thing is that for Reg A, if you're going to be doing a Reg A offering, one of the things that sets it apart from just doing a Reg D is that you have to go and actually have financial statements for a certain threshold. I think it's up to 20 million. And then you have to have audited financial statements if you're raising between 20 and 50. So in Blockstack, I believe in this raised 28. So that kind of, in their defense, that kind of sets them apart from your average ICO issuer. So during the ICO boom, you'd have teams come together in 2 weeks. They'd whip together an ERC20. They hadn't even incorporated, or they were pre-incorporation. They'd go and do a raise, and then they'd say, "Okay, cool." They raise $100 million in the back of nothing. And then, since then, we haven't really heard a whole lot from a lot of those teams. Can't imagine why. It's almost like they don't have incentives to work and ship code. But in this case, what is different is that Blockstack existed for like 4 or 5 years, which is something, as a startup, that kind of longevity is actually a good thing. It means you have a reputation, you're known, people know who you are. If with what they raised, they needed to get 2 years of audited financial statements, so you knew that there wasn't any shenanigans, or there weren't any shenanigans going on behind the scenes because they had audited financial statements. And then they went and they raised it on an arm's length basis, making full disclosures. People looked at their offering documents and said, oh man, you know, this deal looks like a real shit deal. Well, good. You know what? That's what proper disclosure is supposed to do. It's supposed to let people look at these things, critically evaluate them, and say, you know what? This looks like a bad deal. I want to invest or I don't want to invest. And people are making those determinations on the basis of Blockstack putting all of the cards on the table. And yeah, we can have opinions about what they did or didn't do, or you know, and the merits of the scheme and how many users they have, whatever. The fact is, we know how many users they have, and that's an important. And some people, a lot of people, are investing a lot of money anyway because they say, you know what, Munib, let's, to his credit, he's actually, you know, he's a pretty smart guy. He's a pretty nice enough guy. I've never heard a bad word said about him. And I've heard a lot of bad things said about a lot of other people who have done ICOs. So he's one of the guys who, if I had to, you know, I don't invest in this stuff, but if I had to, you know what, Munib's probably on the top 5 list of guys I would invest in if I had to pick someone. So I think the Reg A, yes, you can have your view on ICOs, but the Reg A is a mini IPO. It involves a lot of disclosure, a lot of work with lawyers and accountants, audited financial statements for several years to be provided to the regulator. And when you add all that up, you're then getting a very complete and comprehensive picture of the risks of what you're getting yourself into. And you're dealing with, you know, if you had a company come in, and, you know, you hear rumblings like this of companies that are pre-incorporation will say, well, yeah, we want to do a Reg A plus. One of the nice things as an attorney is that if something like that were to walk in the door, you can turn around and say, well, go incorporate, get 2 years of audited financial statements, and then call me back. rather than having to entertain them as you might, for example, have to do with a SAFT or a Reg D offering, where someone comes in and yeah, they can avail themselves of Reg D right on from day one and go raise money from accredited investors. So they're very different schemes, and I don't see a problem with doing it by Reg A.
Right.
Yeah,
so
no. Yeah, go ahead. No, sorry, go
really
ahead.
quick, just to add to that, Blockstack, I would be speculating if I was to guess how much they paid their counsel to go through this process.
I think it was $1.5 million.
40.
I think they got off cheap if it was only $1.5 million.
Yeah.
$2 million approval.
So starting with the process of putting together the paperwork, filing it, going through multiple iterations with SEC staff while they qualified it, answering questions, dealing with a whole bunch of really important threshold issues. If you want to see people launching decentralized networks, and if you want to see new products coming to market, you have to look at this and say that the folks from Blockstack, who, you know, full disclosure, I know Munib, he's been a guest lecturer in my class. I thought he was a wonderful guy. Not investment advice, I don't represent him, but I thought he was really a great guy, and incredibly intelligent. If you look at the industry, what Blockstack did was they basically did all the hard work and opened the door for a whole bunch of other folks to come in. Now, to Preston's point, this is not 2 guys in a white paper that all of a sudden starts slinging around contracts and collecting money by smart contracts. This is a incredibly well-vetted project, and anybody who wants to try to get an A+ qualified by the SEC is going to have that same level of disclosure. And if you've read anything that the SEC has said about token sales over the past 3 years or so, the point of their contention was you're not giving the proper disclosures and disclaimers to allow investors to make reasoned investing decisions. This is exactly what they've accomplished here. We can, you know, like minds can differ as to whether this is an investment that makes sense for you or whether it's an investment that is going to be fruitful. We're, like all these other startup companies, kind of contingent on the network having value, people using it, and that at that point, the friction instrument they're selling might become more valuable. But most of the ICO complaints, it's a scam, they don't have anything, it's not a real company, it's just somebody that's taking money from somebody else for vapor. I think that the qualification process pretty much puts those objections to rest.
Yeah, no, you guys did an amazing job actually explaining it, and I agree with all of that. I just, I am 100% convinced that what Ethereum is doing is nonsense. And Blockstack is just trying to replicate that. Like, to me, you can't centrally and build a decentralized company. This whole concept is ridiculous And my problem, I mean, it's great that they went through and we can see their finances, and this is a legal way to buy into it. My warning to people is this is a terrible investment. Don't do it. But everything I say, people like to do the opposite. So please put all your money into Blockstack. Go for it.
What I think is going to be interesting is if when we see what exchanges will pick it up on their exchange, because technically it is.
Yeah, that's you're leading into our next topic here.
So the offering circular says that this is not an instrument that should be traded on just any old exchange. It's a security, and therefore it has to be on an ATS or on a national stock exchange. Now, there is some ambiguity given that it's an A+ instrument as to whether you need to go through an exchange. There, I believe, is no prohibition from a party and a party getting together and deciding that they want to trade it. I think that if you want to have an intermediary that is going to be facilitating a market and getting paid, then it would need to be either an ATS, a national stock exchange, or a broker-dealer.
But they're saying that they're not securities, I think, so that it can get on crypto exchanges, but we'll see how that, like, then the onus is going to be on the crypto exchange to make that decision whether or not to list it. So some exchanges that, you know, maybe are located offshore and don't follow the regular, you know, it probably will get listed on some exchanges here, but then it'll, you know, then the SEC is going to be in a real position where they're going to have to say, you know, hey, this is a security, you're not a regulated securities exchange. So it would open those exchanges up to a lot more liability. And then also, don't they have to follow Rule 144 so that it shouldn't be traded for the first year anyway, unless it's traded internally, or is that only
2 years? 2 years.
Okay, I think that's wrong. Preston, I think, agrees with me. I believe because it's an A+, that the 144 and 144A and the lockup periods are not the same.
But
Press, do you want to talk on that?
I'm pretty sure with a Reg A+, you can, as long as you put it on, you know, not legal advice. I don't give securities advice, but to all of you listening at home. But I'm pretty sure with a Reg A+, you can just.
None of this is security advice.
Yeah, this is not advice. If you want advice, then and you don't have an engagement letter, then it's not advice.
You know what, I'm gonna add that disclaimer into the video description just in case for.
Yeah, thank you. But my understanding is that with a Reg A+, if you wanted to, you could just waltz on to an exchange, as long as you've got it on a national securities exchange. There's no lockup like you would have with a Reg D. So that's my understanding of that. So yeah.
For some reason, I thought it was there because the regulated crowdfunding, like the Reg CF, still has the 1 year lockup. So I thought, you know, they had it on all of these Jobs Act.
No, I thought this had a 2 year lockup actually.
Let's find out.
Yeah.
I was under the impression this had a 2 year lockup, but the other questions are.
There's no lockup after a Reg A.
Okay, good to know.
Yeah. So
that's a huge advantage for them over the other options too. Not having.
There are also some companies, I don't want to name names.
Okay.
I'm sorry.
Well, I'm sorry, guys. So yeah, like the Reg A legally doesn't have a lockup, but I think Blockstack is putting in a lockup, like not because of the security, for the token. I think it's they are putting in the lock, not the regulation. Not
all of their tokens were sold via Reg A either. So
yeah.
Exactly. Because presumably some of their tokens are being treated as Reg D offerings, right? In which case those would be locked up. So presumably they're going to want to have a uniform approach for the entire body of tokens that they've issued, so that, you know, the tokens are fungible, I suppose, so that one token that you sell this day is treated legally the same as the token you sold the following week. But that's something I'm sure that they've dealt with internally. I don't want to speculate.
Hey guys, so here's my other question, right? So here's where, like, I don't get what the hell the SEC is doing, because never before, I mean, like, I know Reg A+ is generally new, so they are pushing the boundary here, but they're saying that this is a security, but this token is going to be burned inside their system, so it's a utility token. And this is where, I mean, does the SEC, like, aware of this? Like, is it a security or is it a utility?
Tone, they spent 2 years, I think, going through this. There were multiple written requests for clarification. that were responded to, all of which are public. I think that you would be naive to think that you're looking at this document and seeing something glaringly obvious that they haven't seen. I think that you're looking at very sophisticated operators who are pioneering something for the rest of the industry. Now, mechanics, we're going to see how that works, right? Because none of this has ever happened before. This is new. This is, to my knowledge, the first A+ of an investment contract where it's not clearly equity or debt. And one of the reasons why you may or may not see this hit an ATS or an exchange anytime soon is that most exchanges, national securities exchanges, and most ATSs only have handbooks to sell equity and debt. They don't have handbooks with procedures on how to sell investment contracts. So that's a kind of a little more of a
or utility tokens.
That's a phrase that doesn't exist in the law. That's a phrase that exists in marketing, Tone.
Well, sure, but to me, a utility token is something that, like, actually using a product. I think they're ridiculous. I don't think they should exist. But like the function of that, where you're actually like burning value, right? It's like someone is paying for this, but then you're destroying it. I mean, it's completely silly. I mean, the Bitcoin network doesn't do that, right? You don't burn Bitcoin. The miner collects it.
Not on purpose, anyway.
Yeah, not on purpose.
Only in voting accidents.
Correct.
So, the other thing, I mean, you could have that. You could say, you could conceivably issue a note or a share of some kind where you say, if you exercise your voting rights 10 times, you know, the share turns, you know, will convert into a deferred share. There's nothing which prevents people from contracting into that. It's people don't do it because it doesn't make sense with a joint stock company that you only want to exercise your right to vote 10 times. But if the system is, you know, we can still say it's a security or it's an investment contract. It'll be treated like an investment contract, and the terms are this: after you use it a set number of times, it disappears. And if there's some usefulness that that person finds in utilizing it, you know, that's up to them. That's not really something which we can determine. You know, query the wisdom of what Blockstack's trying to do, which is basically re-architect the internet on a decentralized blockchain, you know, with all kinds of different things, rather than focusing very narrowly on a particular application. But you know, that's an ordinary investor's risk to take. It's not our decision, and they're contracting into it with their eyes open. They know what they're getting into.
Yeah, no, I'm with you. I just think that their mission is totally insane. But hey, let's.
One quick clarification, Tone. There are sales restrictions on Reg A pluses. They in the first year after the offering, there is a restriction that there can only be trades. Security holders can only make secondary trades in an amount equaling 30% of the aggregate offering price. So that means that there's a limitation on how many trades can happen as far as the value of those trades in the aggregate. And then after those 12 months, it's open season.
Yeah, but I think there's still going to be like a lot of KYC issues around this token, because they kind of need to know who's holding this thing. Maybe I don't know. I think we're going to get to that. That's the thing with that Sasha started with. Where the hell are these things going to trade? Do they have to trade on regulated exchanges for securities? Like if Binance picks it up, that could be illegal for Binance to trade this thing because it's a legal security. And Binance isn't registered to trade legal securities. That's why they don't trade Apple stocks. But Sasha, I feel like you want to say something?
Yeah, the timing was really funny with not funny, but it came out right at the same time that the SEC and FINRA put their statement out saying that they haven't figured out the custody rules, and that's kind of what's holding up a lot of the stuff. And then this one, you know, I think Drew said in the chat that it already has a custodian and the SEC approved that, but I thought it was really strange that they would come out and say we haven't figured out the custody situation, and that's why we're not moving forward with or we can't, you know, be confident in how to custody these things properly. And then a few days later, Blockstack got approved without mentioning. Well, I never heard much mention of how they're handling custody.
Well, remember, hang on. These are securities. These aren't. So we see a little bit of playing loose and free with the term digital assets. These are securities in a token form. And so, you know, the offering circular disclosed the custodian. I think it was Prime Trust, if memory serves. Mm-hmm. And apparently we just sort of say, okay, Prime Trust can custody securities. these are going to be securities, so we're just going to stick them with prime trust. I agree that it's an underanalyzed point, but the comments about custody that were previewed with all of us during the FinTech Forum a couple months back, and that were discussed in more depth in that latest staff comment that you referenced that came out 2 weeks ago or so, or a week ago. Those are more related to broker-dealers that are custodying assets for their clients and RIAs that are custodying assets for their clients. The idea there is that those entities are regulated and they are required to hold assets in a way that allows a federal insurance program called SIPA through an entity called the SIPC to insure those assets. And so if a broker-dealer is holding those assets for its clients, and then the BD goes belly up, you have this insurance that makes sure that their customers aren't left out in the cold. If they have 20 shares of Apple stock there, they're insured and they're going to get their 20 shares of Apple stock. What they noted is that the SIPC insurance does not cover digital assets. So it wouldn't cover a BD that was holding Bitcoin, or it wouldn't cover a BD that was holding some other exotic sort of digital asset. And so part of the concern there was, until custody is figured out and formally approved, there's a mention of SIPA right up there, Tone. Then they're extremely concerned about customers leaving things with BDs or with regulated entities, having them get hacked or having them lose them or go belly up, or hit the Bahamas without somebody else's money, and having those customers of these regulated entities be left out to dry.
Right. And Sasha, you just wrote an article about this thing in Bitcoin Magazine.
Right. Yeah. But so for the A+, just sorry, I know we want to move on, but isn't Prime Trust a broker dealer, and anyone doing an A+ offering has to use a broker dealer for it? So that broker dealer would be required to adhere to the consumer protection rule,
yep,
which is what the statement was primarily about. So that's why I just thought it was funny that they put the statement and then allow someone to do it without the insurance. But
so Prime Trust is apparently a qualified custodian.
Oh, so they're not a full broker dealer.
Yeah, Tone, primetrust.com/custody. They market themselves as custodians for cash, Bitcoin, Ethereum, ERC20, stocks, bonds, private business interests, and real estate. I don't know anything about these folks beyond being familiar with the name.
The reason I know this, I got a company that was FINRA approved to be a regulated crowdfunding portal. And so we had to get a broker dealer and pay quite a bit of money for it to get that started. And all the Reg Plus or the Reg CF stuff, it was very strict, rules around how you had to custody it. And FINRA would not approve it without a broker dealer. So it's interesting that this did get approved without one, I guess. But anyway, sorry, I think I'm in the weeds here on it, but it's
Okay, so no, you guys were on the right track. I mean, you guys were talking about the current situation, and I want to transition from Blockstack. Okay, so here again, to me, I don't see a difference between Blockstack and Ethereum. I just don't. Other than from a regulatory perspective, Blockstack is doing it right, and Ethereum, well, didn't have a chance to do it right. Like Ethereum did it the way they had a chance to do it at the time. But I found these tweets very, very interesting. So I'm not familiar with Philip Liu's work. I hope he's a lawyer. I'm a securities lawyer. Excellent. So here's what he wrote. Takeaways on the SEC FINRA joint statement, which I'm going to go to next. Blockchains without the ability to reverse fraudulent or erroneous transactions will not be acceptable as a security token backbone. That's his takeaway from that statement.
Is that even a controversial statement?
It's not. It's not to me, but wait till I transition this. It's not. Okay. Is it controversial to you guys?
Not really.
Okay.
I mean, I'll start talking. I've been involved with a financial services firm that's looked at the securities aspects of this. I've published on this a lot. One thing that we've learned is that if you're tokenizing existing assets, or if you're tokenizing private equity or debt instruments, what you're doing essentially, at least natively, is taking something that usually lives as a piece of paper or as a ledger entry on somebody's spreadsheet somewhere, and you're, instead of having those pieces of paper be distributed to buyers, you're giving them a token. And so changing the form of the asset doesn't change the legal status of the asset, and it doesn't change any of the obligations of the issuer. Among the obligations of issuers of securities is if somebody loses the piece of paper and they give you the right information, you issue them a new piece of paper and you invalidate the old one. There's no reason to think that a lost token or a burned token or an accidentally forgotten private key that renders a token inaccessible should not be treated like a lost piece of paper and replaced by another one. To me, this isn't necessarily revelatory. If it's confirmation of it from the way that Mr. Liu reads this, then okay. I had always assumed this from the get-go.
Yeah, no, and I'm with you, Drew. But let me just read the rest of his, and then I'm gonna throw an interesting question at you guys. So I'm gonna read this one more time because this is also going out to straight up audio podcast. Takeaway on the SEC FINRA joint statement: blockchains without the ability to reverse fraudulent and erroneous transactions will not be acceptable as a security token backbone. It means that, like it or not, asset-backed tokens that go through a transfer agent are probably okay, but coins that have intrinsic value, not deriving value from other asset, are not okay. Well, this also explains why Bitcoin is not a security. So all those security tokens trading on foreign security exchanges aren't going to be showing up in any legal US exchange unless the SEC FINRA changes their tune or the industry moves away from irreversible transfers for security tokens. Now, here is the, I guess here's the catch-22. I'm reading this right after reading all this crap with Blockstack, where the SEC gave them a Reg A for their security token, which is a utility token of their decentralized blockchain that will not only be burned, basically an irreversible transaction, but they are also attempting to build a decentralized blockchain. I believe they will fail, but if you ask them, Blockstack will say they will succeed in building a decentralized blockchain, which is basically what this guy refers to as the backbone of something that cannot reverse transactions. So how is that not a catch-22 by allowing the Blockstack token to be a security where this guy is saying it's the complete opposite? You can't have that as a security.
Well, the SEC says in their statement, they're referring to something called digital asset securities. So when I read that, what I think that they're actually trying to get at primarily are digitized representations of legal instruments that are securities, right? So with anything, with 98% of the stuff that somebody's going to buy, then this makes total sense. I think there might be some, you're right. It doesn't make a lot of sense to have a decentralized, system where it doesn't make a lot of sense to have a decentralized system where you can reverse transactions if someone loses their private key. Presumably, this point came up during the discussions between Blockstack and the SEC, and I haven't read their offering memorandum, but presumably it was disclosed against somewhere in there. And it depends. I mean, it could be that the commission took the view that, this from our perspective, from our perspective, these sorts of schemes, as long as it's fully disclosed and it's not an equity or some other type of instrument that we would recognize as a security, we don't have a problem with it. But that, we don't know what conversations they had to that effect. It makes sense to me personally.
All right, Drew, did you follow my logic? Because this does not make sense to me at all.
Right. So your issue is that if you've got a security token and it's on an exchange where we're perhaps not able to tell who's selling or buying from who, then we may not be able.
Let's drop the exchange for a second, right? The SEC has said that the Blockstack token is a security.
Right.
But this joint statement, as this securities lawyer is implying, it can't be a security token if it can't be, if you can't have, if it's like irreversible transactions, if you don't know what's going on. So the Blockstack token, let's say it never gets traded on any exchange. Let's say the regulated exchanges don't want to pick it up because they don't want to deal with legal issues, and Binance doesn't want to pick it up because they don't want the SEC to shut down Binance. So this thing is never trading on any exchanges. But the token itself is now a security according to Reg A+. This token does not fit this definition because it says right here, blockchains without the ability to reverse fraudulent or erroneous transactions. But the Blockstack token is a security that is used inside the Blockstack blockchain, which will not be reversible if they achieve their goal, which I believe they will fail. But if they achieve their goal, if their goal is we are building a decentralized internet, then how did the SEC allow them to be a security? Because this contradicts this statement.
Because that's not what the SEC actually said, A. And B, I'm looking at the prospectus now, page 24. Stacks token transactions may be irreversible, and accordingly losses due to fraudulent or accidental transactions or technology failures in new wallet software may not be recoverable. I should do like automobile insurance commercials.
Like the Micro Machine Man.
Right, so transactions in stack tokens may be irreversible and, accordingly, a purchaser may lose all of her investment in a variety of circumstances, including in connection with fraudulent or accidental transactions, technology failures in wallet software, or cybersecurity breaches. Cyber, the cyber was mentioned. So losses due to fraudulent or accidental transactions may not be recoverable. So, I mean, and then when I flip back to the SEC's statement for digital asset securities, so this is a custody issue,
you mean
right?
this one?
Yeah. So this is a custody problem. So maybe it's an issue for the custodians to deal with. Blockstack can go ahead and do whatever they want. But if a custodian is then going to custody those assets on behalf of Blockstack's users, then the custodian won't be able to do it because they're not able to take custody because of this irreversibility problem or some KYC issue or something else. So, and Blockstack is going to rely on peer-to-peer exchange. We don't know. Equally, there could be transactions that happen offshore. The internet's a big place. It occurs outside of the United States. So, maybe users in the US will be somewhat constrained for a time in how they do this until there's sufficient regulatory clarity. And that's entirely possible. But someone in England or Scotland or France won't be so similarly constrained. And so Blockstack's ambitions are global. But really the big regulator from a securities perspective that they need to be scared, that everyone needs to be afraid of, is the SEC. So they went to the SEC and said, look, we're doing this. It's going to be reversible. What do you think? The SEC says, well, did you disclose against it? They said, yeah, we did. SEC goes, fine. You've fully and fairly disclosed the risk. Now we go to the next step, which is what happens if a U.S. custodian wants to get a hold of it. Maybe a U.S. custodian, this asset is too hot for them to handle, and so they can't deal with it. But that doesn't necessarily shut down the entire scheme because they can just go abroad, and it can be used more or less freely in other countries that haven't shown such a willingness to step in and regulate this stuff. So that's my take. This is for the statement here is for the custodians, but Blockstack clearly disclosed this to the SEC, said right up front, there's this reversibility problem. And I guess the SEC said, that's fine. This is the contract that people are signing. As long as they know what they're signing and what they're getting themselves into, we'll sign off on it.
Totally agree. If it made it into that offering circular that was approved, then the SEC is aware of it. Undoubtedly, they thought about it. Unquestionably, they decided they were comfortable with the risks. And again, the name of the game is disclosure. They let everybody know.
And the SEC never said you have to be able to reverse something. They just said that there's a higher risk if you can't reverse a mistaken transaction. So they never said blockchains have to be reversible or something. They just listed that that's one of the risk factors for the custody, the broker dealer or whoever's providing custody. If they accidentally make a mistake and send it to the wrong account, they can't reverse it.
All right, let's finish up the broker dealer stuff. And this is a big problem, right? Because the whole broker dealer consumer protection is that in case the broker dealer goes belly up, you want to make sure that the consumer for whom the broker dealer is holding the assets gets their assets back. It's one of the priorities, though didn't really work for MF Global very well. But other than that, that's how it's supposed to work. And this is a big problem in the case of Bitcoin because Bitcoin could be hacked internally and externally. And something you didn't mention in your article, Sasha, is that I think the solution has to be that it's a multi-sig with the regulator being responsible for one of the keys. What are your thoughts on that?
That's my conclusion. If you go down to the conclusion.
Oh, it was your conclusion? I thought I read the whole thing. I didn't pick that up.
Maybe it didn't get in, but they edited it at Bitcoin Magazine. But that's what I thought, is they need to have multi-sig addresses there as being one of the main.
Oh, no, I'm with you. No, I read the multi-sig part, but like specifically the regulator needs to have one of the keys.
No way.
Oh,
no
that
way.
would be interesting.
No way. No way. Look, most of the securities regulation is based upon giving people guidelines and letting them go and do their business. When people step out of line, they get smacked. But generally speaking, this is principles based. FINRA for regulated entities fills in a lot of the gaps. Though I believe the last thing the SEC and FINRA want to do is to be responsible to be a counterparty or a participant in any transactions.
Oh, I'm with you, Drew.
They don't want to step across that line.
Oh, no, I'm with you. I want them to hold one of the keys, okay? Because I want the regulators to know what it feels like to try and protect cryptocurrencies. And then if they screw up, they're going to understand what it's like, and we get to see if they're incompetent or not in holding the key.
Well, shouldn't we call our friends, I forget if it's Bulgaria or Romania, where they're supposedly holding massive amounts of Bitcoin? I'd like to see how they're doing it.
There's also a problem there with the regulator holding the key. There's this little thing called the Fifth Amendment, which says that you can't seize property without just compensation. So I suspect that
when did they ever follow that? Civil asset forfeiture is rampant in the U.S.
Well, if there's any hope of having that go away, it's thanks to our fuzzy friend, the Fifth Amendment. So anyway, I suspect there would be some constitutional issues there with the regulators holding the keys to your Bitcoins.
Well, again, as part of a multi-sig, they don't have full access.
Right. They can only prevent a transaction.
That sounds like a total deprivation, a complete to me.
Oh yeah, there's Fourth Amendment, there's Fifth Amendment.
Right. That's
privacy issues all over the place.
No.
So I'd be curious to hear what you guys think. Do you think that SIPA will ever change their definition of a digital or of a security to include cryptocurrencies so that we could get some insurance on this, or will it remain?
I mean, it's ultimately something for Congress to decide. They're the ones who created the statute that enabled the formation of SIPC, which insures all these entities and all these assets. If there's enough people in Congress that want broker-dealers to be custodying digital assets for third parties, they could make that change if they wanted to. As it exists right now, I think that it's an easy way to police this. I'm speculating as to what these regulators are thinking here. But longer term, what you might start to see are certain states grabbing the bull by the horns here and trying to come up with their own solutions that are potentially more palatable.
Also, remember how early this is, right? This is the first time this has happened. This ICO nonsense has been going on for 6 years, and this is the first time someone has gotten regulatory approval in the United States to conduct a sale of a token. Because everything else has not been, it's been Reg D, right? So it's, caveat emptor, we're selling this to accredited investors. This is the first time ever that someone's really been able to go and say, this has the imprimatur of the SEC on it in terms of the disclosures that we've made. They're satisfied that we've ticked a bunch of boxes on the disclosure front. So it'll be a process of like figuring out where the boundaries are, what works, what doesn't. But I think that a company like Blockstack that went through all of the effort of actually complying fully with an existing issuance pathway under federal statute is going to be given a much easier time than a company that doesn't.
So yeah,
I just hate the fact that the company that got it done first is what their business model is. That's what bothers me a lot.
So don't buy it.
I'm not, and I'm trying to advise people not to.
So here's my question. Let's go back 2 months. If there was a website called Defend Crypto that was raising money to defend a entity that had done an ICO without regulatory compliance and raised $100 million. There was another website called Push A Plus Forward, where you could help to crowdfund an entity that was struggling to fund its bills to get an A+ qualified. Which do you think the crypto community would have funded more? And which one do you think will ultimately have the better net benefit for the crypto community?
I mean, I suppose you can do the math on that by looking at how much Blockstack raises versus how much is raised by this hypothetical website, Defend Crypto, of which you speak. Obviously this isn't a real website, right? We've never
Obviously
heard of
not.
it. So I think the crypto community is likely to be more receptive to the latter approach. And I think that, and I have long said this, my clients regard me as hyper conservative, overly conservative. So what we do is we go to Securities Council, who then will, turn around and say, actually, well, back off a little bit. Preston's being too aggressive here. I think being hyper conservative and avoiding fights with the state is good for entrepreneurs. I think that the one thing that you don't want your client to do is get in trouble because you didn't have the balls to stand up to him and say, pardon the language, but that's what it is. Your client says, I want to do X, I want to cut this corner. And you have to say, no, you can't do that. You must do this the proper way. And so you never want to be in that position where down the line, your client's getting nailed because you didn't have the courage to stand up to him and tell him no, and say, why don't you wait a little while longer or explore another pathway or something like that. And I think that in terms of, where everyone wants to be in 4 years, I think I want my clients to not be in litigation. I want them to be happy, healthy, going out and taking trips to the Alps to go visit the marmots and things like that and take vacations in the mountains. That's where I want them to be. I don't want them fighting, in a protracted legal battle with angry investors or with some state government. And so I don't get the conflict thing is great, but you only get what? So let's say you're an entrepreneur in the crypto space. The average age, I'd say, is between what, like 28 and 40. So you have what, maybe 20 to 30 years left to live. Do you really want to spend 5 to 10 of those years fighting the US government? I don't think so. And so that's how I look at that.
All right, guys. Drew, we only got you for about 10 more minutes. I want you to either comment on both of our next two topics or pick one and go into it a little bit in depth. So one of them is, all of the government against crypto and Libra, starting from Trump to Munchin and the Senate hearings, which I'm sure you've seen. But the one you may want to comment on first is the whole CFTC, having their sights on Bitmex. What's going on with that? Plus, and I'm assuming this is FATF related, on sharing KYC information, which most crypto exchanges don't do, and all of the other exchange stuff, like we have, that's the Financial Action Task Force article, and Cryptopia, disappeared with all the funds, and WAC CEO gets arrested, and the whole, finally Jeb McCaleb is finally being held accountable for the Mt. Gox disaster, which he should have been from the beginning, in my opinion. Let's do this one first, and then let me know if you want to talk about Libra as well. What's going on with the CFTC and the main reason why they're eyeing Bitmex, as Bloomberg explains.
So again, if I was at the CFTC, I would have a little bit of better insight to share with you, but Bitmex is obviously one of the larger platforms. It's renowned for its very large leverages and margin products. I think it's a favorite of traders, Tone. Would you agree with that?
Yeah, the volume certainly proves it, though lately there's been a big exodus because of this, probably.
Right. So, the things that are available on Bitmex would generally, if they were being conducted in the United States, fall within the jurisdiction of the CFTC. Bitmex, of course, if you go to their website, tells you that US persons are not welcome. However, we all know that there's it's sort of like this big show that if you use a VPN or Tor or proxy server, you can probably get yourself onto one of these sites. And so this brings on a whole bunch of really interesting issues, which friend of the program, Stephen Pally, brought up the other day on Twitter, which is how long until we see a bunch of litigation about whether a website is appropriately barring people from outside of the jurisdiction. And then we end up with a whole bunch of case law that talks about minimum contacts, with which we, Preston, Sasha, and I can geek out about as far as assuming jurisdiction. That's a lot of like meaty, fun, technical, lawyerly stuff. But look, the CFTC looking at Bitmex to me isn't terribly surprising. I have no independent knowledge of anything about Bitmex, but it's been operating on a very high profile and very successful way for a long time. Volume comes and volume goes, but assuming that Bitmex is smart, they will figure out a way to work with the CFTC to continue operating. They may have to do certain things in order to bar US persons. It seems like it's an early report about a probe, and there really is not much to it besides the fact that CFTC is looking at the largest, options exchange, futures exchange on crypto. Not a big surprise.
Yeah, I mean, when this came out, the Financial Action Task Force, and it covers, the majority of the world. I mean, this is basically heading in a direction that every single crypto exchange will have to KYC their users exactly like every current exchange does before crypto existed.
Sure. So look, FATF is the prevailing wind at the moment. This is where we're headed. And it is possible, but highly unlikely, that the FATF's recommendations about VASPs is not adopted. It really looks like it is going to go that way. And so the result is going to be that whatever VASP is defined to be, everybody who falls in that definition is going to have to essentially, implement their own version of the travel rule. And that would have widespread repercussions for the entire industry. If a VASP is defined at the wallet level, it could really create some complications. If it's only at the regulated intermediary level, it might simply make exchanges and futures platforms look and act a lot more like they do in the regular world. Scott, I don't think the sky is necessarily falling on that one.
There's something interesting there. If it's FATF we're talking about, there's actually some precedent for this kind of coordinated action that strong arms smaller jurisdictions into doing things. And that was the FATF and OECD tax haven blacklist.
Yep.
That was around in about 2000. And basically that was a list that was maintained by the OECD, which looked at a bunch of, little podunk jurisdictions, no offense, but they're podunk and small, like Aruba or the Cayman Islands or Guernsey or Jersey and all the rest of it, and assessed whether they could have sufficient tax information sharing between those jurisdictions and places like the United States and England, wherever else, so that you could establish whether those jurisdictions were being used as tax shelters. And so if you wound up on the blacklist, all kinds of bad things happened to you. So jurisdictions sought to become compliant. Most of them did. And I think you might expect to see something similar with crypto exchanges, because fundamentally, I mean, this is an anti-money laundering, counterterrorism finance or counterterrorist financing initiative, and I think makes total sense that they would do this. So it's a playbook that they used about 20 years ago, and they're just going to roll it out again in relation to this new asset class.
Yeah, I think it's exactly that playbook. It's interesting to see the US's own regulations not being the leading indicator, while the US is actually the head of FATF, welcoming all this through. Mnuchin, who was mentioned in one of your other tabs, was actually, I believe, the chair of FATF while this was going through, or at least a representative from Treasury was. So kind of a surprise to see the US behind. Mnuchin, and to go to your offer to comment on what Mnuchin said and on what Trump said. Trump's tweets, I like that he spelled Bitcoin right. Mm-hmm. I think it was probably the widest dissemination of the word Bitcoin in the history of Bitcoin. And as they say,
if I would have wrote that tweet, it would have totally been misspelled.
My point is, Trump might have a couple more followers than you. And so now there's a whole bunch of people out there who are watching and reading this. Yeah, a couple. So they're reading about this. And, if it causes 0.1% of them to dive deep into what that he's really saying and what these are all about, then it's a net positive for the industry. People ask me all the time, what's the value of a Bitcoin? What's behind it? It's based on nothing, right? It says based on thin air. And I give them a couple of responses. One of them is there's a whole bunch of technology devoted to maintaining the system. Another answer is there's a whole bunch of electricity being burned 24 hours a day in order to get a new Bitcoin. But the third thing that I say is that there's a tremendous amount of regulatory apparatus built around Bitcoins. We have rules for Bitcoins. We have regulations as to how one can and can't use it. And every time a regulator or a government entity creates a new law that allows you to do something or tells you how you're supposed to do something with a Bitcoin, to me, it's more valuable because it becomes an entrenched part of our economic system. So I look at this and, you know, the president or whoever was tweeting for the president that day says he doesn't like Bitcoin. So be it. You know who has a much more interesting take on this, Tone?
Go for it.
Mr. Trump's best friend and personal valet, Preston Byrne.
All right. Hey, guys, before we let Drew go, I just want to point out this little part from an SEC statement as to how they took down one broker and their company OnePool. And it says here, the SEC alleges that a special agent with the Federal Bureau of Investigation acting as an undercover capacity successfully purchased several security-based swaps on one broker platform from the US despite not meeting the discretionary investment thresholds required by the federal security laws. So basically, it's very easy if the CFTC are looking at these exchanges. I mean, all they have to do is get like a low-wage employee from their organization to, you know, sign up and get it and do it with ease. I mean, that's all it really takes for them to prove their case. This is exactly what they did in the one broker case.
So the one broker case, the SEC had an agent that was trading on there for a long time. It's a gentleman, if I recall, I'm pulling up the complaint right now, but this is yes, okay, it's Mr. Ship Chandler. He has been involved in a lot of these matters. And my understanding is what makes one broker and Bitmex different is that one broker was wide open to US persons. And so we're gonna eventually, if we do see an action against Bitmex down the line, going to end up engaging with the issue that Pally brought to light, which is what is the impact of facially barring and not marketing outwardly to US persons when there are some people who are technically savvy enough to slip through the cracks. That to me is the difference. Right? But if you look at the complaint against one broker, it alleges that Mr. Ship Chandler was on there doing trades for like months.
All right. Anyone else want to comment? Drew, we have to let you go.
Yep, it's my time. Preston, Sasha, always a pleasure to share a screen with you.
You too.
Tone?
Sure.
Tone, love the bracelet, buddy.
Oh yeah, no, they're awesome. We're finally gonna get these up on sale on the Tone-based website. This is compliments of our own Drew Hinkes.
All right, guys. Ladies and gentlemen, take care. Bye-bye.
Bye.
All right, guys. Who wants to comment on which one? We do have other stories. So Sasha, let's go with you. You couldn't attend the Libra hearings, but I'm sure you've seen all of them. I didn't know there were. I didn't see the Senate hearings. I did see the House. Actually, I didn't. Actually, no. Wait. I'm lying. I didn't see them questioning the Libra guy. I watched them questioning the panel after the Libra guy. That I watched, and I need to do my own video about that. But why don't you give us a legal breakdown? I mean, Libra seems to have like, wow. I mean, they've. I didn't real. I mean, like, the government must really hate Facebook, which is kind of ironic, right? Because like the government needs Facebook for all of their data collection, and they're like demonizing them at the same time. And man, do they hate Libra, like with a passion. Like I can also make an argument as to why the government, especially the Treasury, should not like Libra. But like the reasons why they're giving is just wrong. It's like they're kind of right, but their reasons are all messed up. So give us your opinion.
Well, I haven't had a chance to watch the replays yet, but I did watch Naomi Brockwell's versions of, like, her and Caitlin Long talked about it. After the first day they did a podcast, and then after the second day she did a podcast where she spotlighted certain people talking, and AOC was really she was questioning hard some of the, the decentralized nature. And my sense of what came out of it was that they're very concerned about money laundering aspects, and that Calibra and Libra are two separate entities, but I guess there was a lot of confusion on that. Like, one is they're going to regulate the on and off ramps, and it seemed like Facebook is going to just, comply with all of the KYC and stuff like that, and comply with all the laws that they have to, but they're not going to completely roll over and give up. And so overall, it might be a good thing for our industry, because as you said, it's got a lot more people talking about Bitcoin, even the president. And if you look under his tweets, there were some really good comments, like Stop and Decrypt put some good ones. It was like every
Oh, I know Christine. She's come to my workshops. Oh, and she replied to Peter Schiff. Oh, wait, I'm not screen sharing. Hold on, let me do that. I'm sorry, go on.
But yeah, but back to Facebook, it seems like they one other thing that came out of it is the de minimis exemption for taxes, and that was something that they started talking about during the hearings, and that Facebook might be the one to really push a lot of good things forward for the industry, and they have the deeper pockets to do it. They have lobbyists already in place, so overall, might not be the end of the world. And it certainly, I think, was made pretty clear that there's a big distinction between Bitcoin and, shit coins, as it even made it right into the record. And Meltem, the videos, Naomi had a few of her clips in the in her video, and I thought she did a really great job in the bits that I did see. So, yeah.
Preston, that is totally not true. I voted for him as well. I even wore Make Bitcoin Great Again hat to the polling booth, which really confused a lot of people.
Yeah, so I actually got a phone call from Slate after I posted that tweet. And they're like, "Hey, would you go on the record and explain what's going on with that?" And I was like, "Yeah, sure, I guess." And so to get on the phone with this journalist, and he goes, "So you voted for Donald Trump?" I was like, "Yeah." He goes, "Why? How? Amazed that anyone could have done that." And I was like, "Well, I like low taxes and freedom and economic freedom, and I don't know, kind of conservative things, and the American flag, which I put on an American flag cape every morning. I then say the Pledge of Allegiance over my oatmeal. What do you want to How could you, what's going on there? I mean, so my read on this is that, again, it isn't really Trump doing the talking. Which is what I told the journalist. He was like, "Well, another thing." He's like, "Well, what does this mean that Trump?" And they always say Trump. They never say the president. And he goes, "What does it mean that Trump? Trump said this. What does Trump think about Bitcoin?" And I said, "I'll be honest with you. I don't think the president really has very strong opinions on Bitcoin whatsoever. I think what happened here is Mnuchin got on the horn with the banks. They're concerned about Libra because Facebook is threatening to show up with this highly disruptive, direct access, direct to customer." They've got the best distribution in the world, right? They can go and roll out an app to 2 billion people like that. And what are they doing? They're saying, well, we're going to have this thing that's kind of a security and it's kind of not a security, and it's going to have variable value. And we've made all these promises about the things that it's going to do, and we're not sure about, so they say it's going to be anonymous, but it's also going to be legal and KYC'd. So they come up with all this stuff. The banks read this, they promptly freak out and then call up Mnuchin and are like, "Dude, what is going on here?" And so I think that really the president's Bitcoin tweet was a segue to talk about the Facebook and Libra issue. It's nice that Bitcoin came out of the official presidential Twitter account, but I don't think really it's too much of a read as to what the government is thinking. And also, it's really kind of at variance with what we're seeing from the SEC and the CFTC, because they've actually been very Bitcoin forward. They've been trying to encourage innovation and ensure that there are responsible pathways for entrepreneurs who want to work with Bitcoin or other digital currency or cryptocurrency like assets, and sell those to the public, right? So I think that I don't really read too much into what the president said. I think it's mostly about Libra. I'm very apprehensive about Libra for a lot of different reasons, and so that's my read on that situation.
Gotcha. Hey, I took a picture of my ballot. I actually tweeted it out. Right there with the hat.
I have to get one of those hats. I'll do that now.
Apparently, it's against the law to tweet out your ballot the day of the election.
Depends on the state. I would imagine it would depend on the state. So.
Don't go to any Antifa rallies wearing that hat.
See, this is back in the day when I only had like 8 followers, so there were 3 likes to this tweet. Ironically, one of them was Whale Panda. Oh no, I'm Whale Panda. Sorry, is that so Samson? My bad. I'm getting my furries confused. Okay.
There's another thing about Libra I think that's worth mentioning, which is that whoever's coming up with this stuff over on Facebook's end, like their white paper was a mess. It promised that this thing was going to do everything, that it would like babysit your kids and walk your dog and do all this other stuff in addition to being, you know, the global replacement for money. And it just struck me that so for example, they said, well, they've been making a lot of noises about privacy. Okay, great. But they're also saying this thing is going to settle down onto a blockchain, which is then run by 100 different corporations. And all of those corporations are going to be able to do full analytics on all of the transactional data, including companies like Union Square Ventures and Andreessen Horowitz. And I mean, if that's how they're going to approach it, firstly, all of the data is going to be known to everyone. They're going to be able to figure out who you are pretty quickly. And 2, they might as well just publish the transactions onto the cover of the New York Times, because it's just, there's no way that all of these companies are going to have sufficiently good OPSEC, especially like Kiva and the other nonprofits that are on there, that someone isn't going to worm their way in and get access to that transactional data first. Second, they then have said stuff like, we're going to allow, most accounts are going to be KYC'd, but then we're also going to have account balances that are not KYC'd and that don't have a link to your real identity. And that's the kind of thing, when you look at it, you go, well, that's kind of weird, because last time I checked, if you're a licensed money transmitter, which you will be, then the CFR basically says that you need to have in place an AML compliance program. And that AML compliance program involves knowing everyone who's transacting on the system, no matter where they are, no matter what they're doing. So it's not like you can permit people to start doing anonymous transactions just because you're doing, you know, oh, well, we're KYCing everyone in the Calibra wallet, but we're running this system that might be used for money laundering by some other user using some other wallet. That, I don't think that's going to fly. So basically, I think there are a lot of promises. I think they've told us that it's going to do a lot of things. And I think in the end, if they really want a blockchain, and I don't understand why they want one, they should just use friggin' Postgres. But like, if they really insist on doing this on a blockchain, where everyone who's running a node is going to have permission to read the entire and verify every transaction on in the entire transactional history, it's not going to be private at all. Everyone's going to have to KYC themselves. And to the extent that there's, for example, a right to be forgotten, which can be enforced, or removing user data, you know, you're not going to be able to comply with those regulations over in Europe. So I look at it and I think they've made a lot of promises. It's you know, it's a Facebook ICO, right? Like, they took a bunch of tech utopians, they dropped them in a room, and they assume that just because they say it can be done. But I don't think they have. Let's remember, Facebook hasn't actually done this before. They're a relatively new arrival on the blockchain scene, and the 2 people who are running it for them, Morgan Beller and David Marcus, are also neophytes on the blockchain scene. They may be eminently qualified, very, you know, eminent Silicon Valley neophytes, but they are neophytes. They're new in the blockchain and crypto neighborhood. So they're saying a lot of stuff, and then when it comes and lands on our desks, we're like, well, okay, we heard that one. You know, congratulations, 2014 called. They want their argument back. You know, they want their pitch back, and it just doesn't. It strikes me that they haven't really done all of that thinking yet.
Mm-hmm. And from the you know, social capital side, like what China's got going on, I think that's another big fear with this. You know, if you're using all Facebook's money, and say you're an Uber driver and you didn't pay your mortgage, so you've gone down on the capital scale, you know, and then they lock you out of your car, so you're, you know, make it so you can't use your account that you're going to use for driving, or like it just gives a lot of power in a, you know, if we did move on to a system like that. But
all right, so I can never pronounce his name. Nunchin.
I think it's Mnuchin.
I say Mnuchin, yeah.
Mnuchin. So he had some other funny things to say. This one came from Squawk Box, where he basically says US dollar he doesn't think US dollar is being used for nefarious purposes, which is like hilarious. Definitely some good sound bites there. So I actually had a problem with this article. I mean, I do want to get off.
Did you, Tone? I
oh
read
my
it.
God.
Oh my God, Tone must hate reading this so much.
You sent this to me, Sasha, and I'm like reading it. I'm like, holy shit. Does this guy really believe that most of these ICOs were not scams? I think it's just for the purposes like, wow. Hey, this article is linked below the video. This frustrated the hell out of me, where this guy is making an argument that these ICOs were not scammy. Wow. And that Facebook is lying when they, I mean, it's a little hypocritical, you know, if Facebook is going to ban crypto ads and then go and use the crypto, you know, spirit to try and push their own currency. Now, the government, from the perspective of the government, they should be scared of private currencies because that can remove their monopoly on money. But don't give me this bullshit that Facebook can't be trusted with data. They can. I would trust Facebook with my data like 1,000 times over before I trust the government with my data, right? So like, they're a private company. Facebook doesn't have the ability to throw me in a cage, but the government does. So if there's anyone I'd rather share data with, I would happily share all my data with Facebook and Google openly, as long as I have a guarantee from Facebook and Google that they're not going to share this data with the government. They can throw me in a cage for said data.
They don't have a choice. I mean, they don't have a choice. If the government hits them with a grand jury subpoena, they have to hand over the data. So, like, if the data exists, chances are both, and because Facebook and Google are global scale companies, it's not just the U.S. government. Any tin pot, you know, dictatorship that they have, they operate in that hits them with a court order, they're going to turn your data over. So, I mean,
Preston, no. I'm not debating you on that. I'm just saying that for the 5,000-year history of our planet, right? It's not the private companies that are endangering your freedom. It's the government. So when the government gets on its high horse and talks about how it's dangerous for Facebook to have your data, but we are here to protect you by having all of your data, that's as hypocritical as it gets in the history of the planet.
And there's another issue with it too. Like they kept saying, you know, Facebook can't be trusted with data, but the government requires every money transmission or every money service business to collect and keep the data of each person's KYC information for 5 years. And Facebook, you know, they have the money and the resources to at least try their very best to secure data, but a lot of these smaller companies that are required to get the money service business registration, they really have, they keep the stuff in Dropbox or places like that. It's a lot like that.
No, right. And this transitions to this. We're not going to talk about this topic because the show is already running late. We'll probably save it for next time, especially because Drew's company, Carton Fields, wrote this whole thing about taxes. But like this set of tweets right here, where is it? Here it is. You would think that these subpoenas would be served to crypto exchanges, but the IRS plans on serving them to Apple, Google, Microsoft in order to search through taxpayers' download history to see if they have ever downloaded cryptocurrency applications. Now, this, I don't believe this statement, actually. You can't blanket subpoena Google for everybody's data. Even if you could, the government cannot manage that data. Like, what do you think of this statement, guys? You're lawyers. Like, this is an unreasonable breach of rights.
So it'd be a Stored Communications Act subpoena that's being served on Apple, Google, or Microsoft, or a search warrant, which means that the IRS here would be, I mean, is it the IRS who's doing it actually, or is it DOJ? I don't know.
I mean, the IRS is a subsidiary of the the DOJ is, they overlap. Like the IRS criminal division overlaps with the DOJ.
I mean, I've never seen...
From my understanding of the government. I mean, I've been doing the show too much.
But if it were like the DOJ who were saying, you know what, we're going to criminally prosecute someone for tax evasion. And they were serving, it wouldn't be a blanket subpoena where they basically, because remember, the IRS tried to get all the blanket data from Coinbase. They went after them a couple of years ago and said, listen, we want to get all of your user data so that we can do tax enforcement, right? That's not the kind of thing that you would see with a Stored Communications Act subpoena, at least not in any that I've ever seen. So it'd be interesting. Maybe that would be, well, we need to add another data point to prove that this particular suspect, who we have a reasonable suspicion, a reasonable articulable suspicion, has been dodging their taxes. We're going to go and hit all of their social media accounts, or not social media accounts, all their accounts with like Apple and Google and Microsoft to see if they've downloaded stuff from their app stores. I don't know. So that strikes me as something they would really only do with serial evaders, rather than saying we want to know lists of everyone who's ever downloaded a cryptocurrency app. That strikes me.
But they do understand. I mean, they clearly don't understand that downloading a cryptocurrency wallet doesn't actually tell you how much that wallet was used or at all.
Let's see. Here we go. IRS demands production. Yeah, so that's.
Like, just because you've downloaded, I mean, it depends on the wallet, I guess. But like, if you downloaded Samurai Wallet, I mean, they have no idea if you used it for 3 cents or you never used it or you use it for $1 billion. I mean, you're not going to be able to tell. I mean, they don't know this. They'll learn the hard way after they waste their money and time getting these subpoenas.
Yeah, I mean, I got to say, I'm not familiar with the IRS's subpoena power and how they do it. But I would say that it would strike me as really unusual if they were doing a blanket subpoena to those companies for all users for the purposes of tax enforcement. It's more likely that they would.
My bad, I'm not sharing screen. Sorry, guys.
Yeah.
And the PowerPoint slide that the IRS put out, it was really long, and it looked like it was one of the worst PowerPoints. Like, yeah, you can see it there. Like, you can't even, why wouldn't they make that text white over,
No, you can't even read it. No, it's a disaster. Like,
and it's super long and all over the place. So part of me wondered if when they wrote that part about the subpoenas, like, can you even trust the person that wrote this, that the information's accurate? But
yeah, how seriously do you guys take that the IRS is going to be subpoenaing Google and Apple and Microsoft to find taxpayers if those taxpayers weren't supplied by something like Coinbase and they've already cross-checked these people and then they have suspicion?
Wouldn't surprise me one bit.
yeah,
For them to do that, that'd be
besides that. I mean, like I think the only obvious path here is if you subpoenaed the crypto exchanges, you got the names, you cross-checked those names against their tax records, and then if something doesn't add up, then you go to this level. I just don't see them randomly going through crypto Twitter and trying to identify people. That seems insane.
It's logical. I mean, if you look at who they're probably targeting, though, my guess is they're probably looking at, because there was a statistic somewhere which said that in 2016, only 830 people or thereabouts declared cryptocurrency gains on their tax returns. And so my guess is they're still probably seeing a very considerable gap between how many people are declaring and what amounts are being declared as against trading volume, keeping in mind that trading volume on US exchanges, every time you effectuate a trade, that is generating a taxable gain and you make a profit, that's registering a taxable gain, which you should be reporting to the IRS on your tax return.
Which is also why no one trades on US exchanges.
Fair enough. But
and hence the CFTC and Bitmex situation.
So that if that's where they are, though, then let us say we have Joe Bloggs, Joe Bloggs, the super Bitcoiner who lived in his mom's basement but got into Bitcoin when it was 10 cents a coin, spent his entire college fund on it, and then just basically invested a bunch and hasn't really reported it since. And then decided to go out on the Bitcoin circuit and do whatever else and became a big star because he made a lot of money. I think that with someone like that, it's very easy for them to look back and say, well, hold on a minute. He's reported $30,000 in income for the last 6 years. What are we missing here? And for that, you might want the extra data point. I'm not saying this is something that I approve of.
You hear that, kids? You may want to live in the woods and drive a 10-year-old car.
Tone, I'm sending you a link right now. It's from Larry Cermak in September, but it has a chart of all the different government agencies and the amount that they've spent on enforcement or research. And the IRS is very, very high on how much they've spent. So it's just kind of interesting to compare them all. I put it in the chat,
Which chat?
the Zoom chat.
Oh, okay, I got it. Too many chats. Okay, cool. Got it.
Damn, is all I gotta say.
Oh, it took me to, that was weird.
Twitter. But it basically, the IRS has spent 38%, where ICE is the next highest at 27, FBI at 20%, and the SEC is only at 3%. So it's pretty, you know, the IRS has spent a lot more than the SEC. And look at everything we've seen come out of the SEC so far. So it makes me think the IRS is gearing up to be the main one that we need to be watching in the coming years.
All right, pay your taxes, boys and girls.
Yeah, or this one, that's the one I was talking about.
So that's how much money they're giving to Chainalysis and stuff?
Mm-hmm. It's just it's called total spending. But
That's the proportion. So that's their chunk of total government spending. So they're spending 28% or 38%. 38? Yeah, 38%. All right.
on blockchain analysis, yeah.
Yeah.
Oh, you mean 38% of what?
Total government expenditure on blockchain analysis service from basically Chainalysis.
But this could be like $1 million, right? Like
it could be, but if
total
we look,
pie, like we don't know how much that is. I mean,
we do. If you scroll up a bit, a couple of tweets up. Oh no, that's not. Never mind. That's not. That's how much the companies have raised. Yeah. Let's see. Oh, they have some data, but I'm not going to crawl through it because.
Oh, here it is. Cumulative funding of government agencies on blockchain analysis. So they're up to $6 billion. Holy shit! Is that where our money's going?
I think that's $1 million. That's an M.
Okay, no, yeah, there's a point there. Okay, yeah, 6 million. All right, that's okay then. Yeah, they're not gonna get that much done. All right, cool. All right, guys. Hey, Jeb McCaleb. He's on my like one of these days. I'm gonna bring back the Scammy Awards, and Jeb McCaleb is up there with Dan Larimer for the Lifetime Scammer Achievement Award, and he's finally getting some recognition for this in a case where people are suing him over the Mt. Gox fiasco, and I have to agree. All of these links are in the video description. I have not looked at the case file. It's just like, Jesus. In a different life, I might have been a lawyer. But here, I always go back to this article written in 2016, though for some reason updated a year later. And it's an email exchange that I always point to between Jeb McCaleb and Mark Arpellis. And this is about 2 months after Mark Arpellis had bought Mt. Gox from Jeb McCaleb. And the email goes like this, where Mark Arpellis, where's the email from Mark? Basically questions, hey, dude, there's 80,000 Bitcoin missing. And Jeb McCaleb's reply in an email from April of 2011, basically saying, yeah, it's your problem. Slowly buy more Bitcoin with USD that Mt. Gox has. Hopefully, you will be. How do you buy 80,000 Bitcoin in 2011? There's like no one has it. Go find Satoshi. Buy a big chunk of Bitcoin, whatever. Get those Crystal Island people to invest. They have 200 plus Bitcoin, so they could fill in the gap. Maybe you could just mine it. I like the one where it says, oh, did they remove this? Wait a minute. Something's missing. Wait a minute. I want you guys to comment on this. I need to fact check my own records. Hold on a second here.
Yeah, Tone. So I had listened to Jed's interview on Peter McCormick's podcast a couple months ago, and then I reread the transcript of that today. And Jed was saying that 80,000 hack happened during the handoff period, and that at the time it was worth 30 grand, and it was from two.
It was worth 64 grand, but yes.
Okay. Well, like you said, his whole attitude was very cavalier about it. Like he's like, oh well, whatever, you know, it was already gone. But that had happened during the handoff, and then that was from the hot wallet, and he actually could see when it was happening. And it was 2 accounts that got hacked because they had really weak passwords, and those people changed their passwords, and supposedly the hot wallet was, you know, once again secure, and they didn't want to refund that because it was the people's individual wallet that got hacked and not the, you know, the cold storage was fine. But then once the handoff was finished, Mark Karpeles somehow let the cold wallets get hacked too, and he never checked the balances, and that's where the, you know, bulk of the Bitcoin was stolen. So his attitude was like, oh, 30,000, or, you know, what you said, you know, it could have been 80,000 Bitcoin, whatever that was worth at the time, was just kind of like a cost of operating. And there were also some issues with PayPal where they were getting a ton of chargebacks and stuff like that at the beginning. And that's when he realized it was a bigger venture than what he wanted. So he got rid of it to Mark. But then these emails, yeah, they paint a little different story.
Oh, never mind. It was right here. Slowly buy more Bitcoin with the USD that Gov't bot has. That's what I was looking for. Sorry.
Yeah.
Yeah. No. These emails paint a very different picture. Very different. Not to mention that. Oh, what happened? Am I still live?
Yeah, you're still going, I think.
Okay. Something went wrong here. I think something froze. Are we still good?
I think so, yeah.
Okay, a little bit of a lie on my opinion. Okay, so here it is. So here's the kicker, right? Like, and I did a whole video, my Ripple video, because he then went on and created the Ripple scam, and then he went on and created the Stellar scam, which is why he's on my list of Lifetime Scammer Achievement Award for Mr. McCaleb. But man, where was it? So hold on, guys. I'm looking for it. Here. In June of 2011, Mt. Gox was hacked once again. So this is like 5 months after Mt. Gox got sold to Mark Karpeles from Jeb. And it says here, investigators at the time believed that the hacker might have gained access through Jeb's McCaleb administrator account, which was still active. That is clearly negligence on the part of Mark Karpeles, but at the same time, proved to me that was hackers hailing Jeb McCaleb to hack Mt. Gox versus Jeb McCaleb realizing he still had access to Mt. Gox internal servers.
I doubt that very highly. I've met Jed McCaleb, and you know, think what you say about his projects. Personally, I actually think he's a pretty nice guy. So irrespective of what we think about what he actually did, I don't. Whatever has happened here, I don't like jumping in and arriving at conclusions when it's like back and forth and there are disputed facts, because if we knew everything about Mt. Gox, then we would know everything and there would be an uncontested narrative and no one would be suing.
Yeah, no, we don't know.
So I think for here the thing to do is just let this play out and not jump to any conclusions.
Well, which is why I love this case, because hopefully this case can get into some of those details.
Yeah, and I think that's really all with this stuff that's like super duper personal. You know, for all we know, anyone in crypto could who's involved in business in any way could find themselves on the receiving end of a lawsuit from one of their former business partners or from someone who's a customer of theirs. So I don't want to jump to any conclusions here. So Jed got sued, great. Like, you know, it happens in business. And we'll see what happens. Presumably he's going to defend the claim. And we'll be able to see, just as we've been able to see, for example, with the Craig Wright litigation, we've been able to see all kinds of public documents being published there. We're going to be able to see all kinds of public documents being published here, assuming it actually goes to trial.
Okay. So let's move on from this story. And actually, I mean, we can kind of wrap it up. There's a bunch of other stuff, but we can save them for next time. There is, oh, the FBAR stuff. I was very happy to hear this. The FBAR thing was really worrying me. Sasha, you want to comment on this?
Yeah. So same thing as, it was good news to see that. So this AI CPA virtual currency task force reached out and requested, some kind of comment from FinCEN and got, I don't think it's a definitive answer, but they answered that it wouldn't be held, that virtual currency that's held in a foreign account is not considered reportable for FBAR purposes. But then it gives another caveat at the bottom saying don't rely on this. So I'm not sure how strong we can rely on it or not. But to me, if FinCEN said it, then I wouldn't report it. But I'm not a tax advisor either.
Yeah, I can't imagine why anyone would want to hold cryptocurrency in an offshore account. Not your keys, not your Bitcoin.
Mm-hmm.
You should have it, safely secured in a buried in concrete in your basement or something.
Yeah, that's true, Preston. But even with that, the concern was that FBAR rules might apply to U.S. citizens. And for those that aren't familiar with FBAR, basically, if you have more than $10,000 worth of cash in a foreign account, and let's say in a foreign bank account, you're supposed to report that. And by not reporting it, they can fine you up to half the amount of what is in the account. And they can fine you that every year. So if you had, let's say, $20,000 in a foreign bank account, and one of my co-workers on Wall Street had this problem because he basically had a joint account with his mom because she was also a British citizen. So he was a British citizen and a US citizen. And he had a joint bank account with his mom, and they had more than $10,000. And then all of a sudden, he gets notified by whatever FinCEN, I guess, for FBAR purposes, and they fined him 50% of the money in that account every year he didn't report it. So think about it. So if you don't report it for 3 years, not only do you owe them all of the money in that bank account, but 50% more. So if there was $20,000 in that account, all of a sudden you owe the government $30,000 by not reporting that account after 3 years. That's how bad FBAR is. So the concern was, even if you have your Bitcoin on a Trezor as an American citizen, can the FBAR law apply? And that can really get you in a lot of trouble. So I'm really happy that this thing isn't like, they're not going to say, hey, we think we have evidence that you have $30,000 worth of Bitcoin on your Trezor, and you haven't reported it in 3 years. You now owe us $45,000.
I mean, in the plain language, I think that's a common sense conclusion. I mean, if we look at the plain language of the actual statute, and we look at what's covered, so what's a reportable account? It's bank account, which means savings deposit, demand deposit, checking, blah, blah, blah. Okay, not that. Securities account with a person engaged in the business of? No. So, buying, selling, holding, or trading stock or other securities. Interesting question, actually. Is it a securities account? Now that maybe this is something which hasn't really been considered, but is it a securities account if the SEC considers, for example, the Blockstack token is a security, and then you go and you hold Blockstack tokens in the Netherlands through an overseas exchange? Suddenly, do you have a reportable securities account for the purposes of FBAR reporting every year? That's an interesting question. But like with Bitcoin, obviously they haven't exerted any jurisdiction there. We then have other financial accounts. So the term other financial account means account with a person that's in the business of accepting deposits. No, for Bitcoin, because it's not with a person. An account that's an insurance or an annuity policy. No. An account with a person that acts as a broker or dealer. No, because again, this is not how virtual currency works. An account with a mutual fund or pooled fund. which issues shares available to the public, which have a regular net asset value determination? No. So like, it's just not on the list of stuff that's a reportable account. So there was a similar sort of related question about whether when you're crossing an international boundary with Bitcoins, whether that constituted something that you needed to report when, and at the time I was an English solicitor and not a US lawyer. I'm now qualified in both jurisdictions. And HMRC, which is the British equivalent of the IRS, when someone said, hey, HMRC, we got a question here. What happens if I enter the country with, $50,000 of Bitcoin? Do I have to declare it when I cross the border? And HMRC turned around and went, well, actually, no, you don't, because when you cross a border with Bitcoin, you're not actually crossing the border with Bitcoin because Bitcoin exists on the ledger. You're just happen to be crossing the border with your password, your private key. And so as far as we're concerned, you haven't actually carried the money into the jurisdiction.
Wait, so who said that?
English HMRC, so the English equivalent of the IRS.
Okay, how do we get the IRS to say this?
Well, so here's the thing. Like, I would expect that you, as this question comes up again and again and again, in England, I don't know what it was. Like, English Bitcoin people must have been super annoying because the HMRC must not be as uptight as the IRS because they've come out with guidance, lengthier guidance earlier than the IRS has. So like they were talking about this stuff in 2013, 14. So here, people just need to keep asking the question. And I think they need to structure their affairs conservatively to deal with however it means. And if that means not dropping, funds into an overseas exchange so that you avoid accidentally creating a reporting requirement for an overseas securities account, fine. Or what you do is you turn around and just do the FBAR reporting, right? Maybe that's not an acceptable solution to some people. But if you haven't filed your report, you just go and file them, and cover your butt that way. So I don't know. It's interesting. I expect we'll get more clarity going forward. But it strikes me that was probably the right conclusion, at least from a plain English reading of that statute of that particular provision of the CFR. It just doesn't strike me that it's covered.
Gotcha. All right. Oh, hey guys. Just quick. Does either of you have any kind of update? Are you following up with the Bitfinex versus New York Attorney General case?
I haven't heard anything on it recently.
I think I think there's supposed to be some fruit off of this tree in the near future. So maybe next episode, if you guys can follow up on the latest in that saga, that'd be great. And yeah, I think it's about time we wrap it up. I mean, I think it was a great show. Unless you guys have closing thoughts, as usual, we will end this show with our moment of Zen. So Preston, you probably haven't heard this yet. This is an ICO that I've been going to battle with, and the battle continues. And I play this moment of Zen at the end of our legal shows. Have a listen.
I got questions.
Yeah, I had a question. I appreciate you guys making this happen and you being here, Derek. But the question I had, I've been going through ICOs and researching a little bit. And how safe are we here in the U.S. Not being an accredited investor investing in this ICO?
How safe as you or for us?
For myself.
You guys are fine. I think one thing I've learned a lot in the industry, especially since working in the finances, as long as the people make money.
Oh no!
It cut out the best part.
Oh yeah, we gotta rewind that. We gotta rewind that.
You guys are fine. I think one thing I've learned a lot in the industry, especially since working in the finances, as long as the people make money.
You gotta be kidding me.
Yeah, as long as the people make money.
Try reloading the page.
Yeah, nobody complains.
Did I catch that? As long as people make money, nobody complains.
Correct.
That I don't even.
Real estate advisor to sue Tone for defamation for what they said themselves.
That's kids. If you're looking to do an initial coin offering, that's not good advice. You should go speak to an attorney who has done this before, and you should definitely not follow that advice. That advice is what put Martin Shkreli in jail. As long as people are making money, the securities laws don't apply. That's just not true. So yeah, that was a great moment of Zen, Tone. Thank you for that.
Preston, it was really great having you on. I always have enjoyed your tweets over the last years, and it's nice to to get to meet you and talk with you. And I really appreciated your insight in a lot of this.
Oh no, nice to meet you as well. I mean, I've been following you on Twitter for a while too. So and obviously Tone and I were talking a couple of weeks ago about this up at Pork Fest. We were going to do a show, and he was like, "You want to do one now?" And I was like, really beat. I actually wound up being really sick after that. Like, I caught the libertarian flu or something.
Oh.
Like I had like a chest cough for 2 weeks. But yeah, it's great to be on, and looking forward to doing many more of these. This was a ton of fun.
Awesome.
Yeah, no, thanks for coming on, Preston. And hey, shout out to Coin Jazeera. I didn't know they put out this article. I need to read it. I love their work.
Oh yeah, scroll down so people can read it. It's so funny.
Oh yeah, Noriel. That's
he was shining too hard, Arthur Hay.
Yeah, they're so inappropriate with their articles, but I love it. Preston, have you read any of their articles?
I have read a few of them. Most recently, I read one about the CEO of Gab, Andrew Torba, and which was pretty hilarious. And Andrew was like, "Yeah, like I don't like I can't tell if I didn't know any better, I'd say this isn't fiction," because it was like that was pretty amusing. What else? I've seen a bunch of those articles up. Coin Jazeera is really very, very funny, and so yeah, I'll take a look at the Arthur Hayes one later today.
All right, guys. Hey, thanks again for joining. I'm sure there'll be plenty of other stories for us to cover in a week or two. I'm going to try to be more productive and more on the ball with the show. But as usual, thank you for joining, guys. Preston, hope to see you on the show more often. And any closing thoughts? Go for it. Go ahead, Sasha.
Yeah, I don't have anything too major to say here. It's just interesting to watch it all. A lot happened this week with the Facebook stuff, and I do feel encouraged that Bitcoin is becoming more legitimized and mainstream right now, and I think that can only be good for the long run. Although there are a lot of concerns, but overall.
Anything we should keep our eye on for the upcoming week? Any announcements that you know of are coming that are related to legal issues?
Not that I know of.
All right, Preston, closing thoughts?
Closing thoughts. So Drew has, although he's bailed out on the show, he said, ask Preston about why ICOs remind him of aliens. And so I think I'll answer that. We all remember the scene from Aliens, the movie, where Bill Paxton is sitting there and he's freaking out in the dropship, and everyone's wondering what to do because the aliens just torn apart the crew. And finally, Sigourney Weaver takes a drag of her cigarette, holding a rifle, and says, "I say we take off and nuke the entire site from orbit." I think with some parts of the ICO industry, like nuking it from orbit is overdue. I think the regulated portions of the industry, just bringing it back to what we talked about on the show, it's great. Irrespective of what you think about what Blockstack's doing, it's great to see that there's a regulated pathway for people to get compliant and sell utility tokens, which are treated as securities for U.S. purposes of U.S. securities law within the United States. I'm really happy for Munib and team that they pulled that off, and it's going to be really interesting to see so any company that's going to avail themselves of that in the next 6 to 12 months is going to be a company that's been around for a little while. So think Tyrion, think all the guys who, the companies that have been around who have actually not screwed up yet are going to be able to use this issue or done a huge, mega offering. They're going to be able to do that, and I think that those guys, they're known quantities. We've known them for a while.
Yeah, it will be just as unfortunate if Tyrion goes the Reg A round. And
I think they can. Well, after they did a regular ICO like Ethereum, right? So at least like Blockstack raised 47 million on Reg D, not regular ICO, but.
I don't know what Tyrion did. I just know Wayne because he and I are, it's the Connecticut blockchain crew. So, and so I have a lot of time for Wayne. But anyway, companies like that that have been around for a couple of years, this Reg A Plus is now going to be really useful for them. So I'm not too interested now in the regulatory enforcement stuff is going to happen no matter what. There's always a 4 to 10 year lag in terms of bad behavior resulting in, you know, reportable convictions and things like that. But I'm much more interested to see what happens. I think the Reg A thing was the biggest piece of news in the last 3 to 4 months that we've seen. Facebook, not so much. That'll be a regulatory minefield anyway. But I'm much more interested to see what the startups do, and it's going to be really interesting to see what happens. My closing thoughts are: keep an eye out for more Reg A announcements, and I think
I'm with you. I think it's going to open the Pandora's box here.
And
open the marmot burrow.
Oh yeah. Oh hey, sorry. So we had a couple of comments. Over to you, Preston. We'll probably cover this next show you're on. Do you still think XRP is a security? Don't answer that. We'll save that as a teaser for an upcoming show. And
Sure.
the other one you could answer. Have you considered being an Elvis impersonator at parties?
I haven't considered being an Elvis impersonator. I get Jim Brewer a lot from Half Baked. Some of you may remember that film. But no, not Elvis. Not anytime soon.
Sasha, you had something to say.
One of the comments is asking if you're the first, if you're the first person to be storming Area 51, Tone.
Me or Preston?
Tone's early for the Area 51 storm.
I'm out in the middle of the woods. It got dark. When the show started, it was nice and light. All right, guys, let's wrap this up. And thank you all so much for watching. And we will see you all on the next Bitcoin Law Review. Hopefully at least every 2 weeks, and I will do my best to bring you another show. Say thank you to our guest, lovely Sasha, Preston Byrne, and Drew Hinckas. Thank you guys, and see you all on the next one.
Thank you. Bye.